In all of this madness of player versus player, meme coin speculation, there are still some tokens with some fundamentals, as in Arbitrum. Arbitrum is a layer 2 scaling solution on top of Ethereum, and it also has positive price momentum right now. So we are currently at 47 cents. And in the last month alone, the ARB token went up by 65%. Now, how much more can this really last? What's the potential upside here? Now, it's noteworthy that Ethereum went up to a very similar degree during the same time frame. And regarding the capital that's locked on the chain, Ethereum actually outgrew Arbitrum in the last month. So ETH's TVL grew by 40%, while Arbitrum's TVL only grew by 29%. Here's the total value locked development of Ethereum since April of 2023. So we've seen a quite constant increase with recently a bit of a drop, but the growth and volatility of Arbitrum's total value locked measured in ARB tokens, it's much higher. Now, why did meme coin trading become that popular in the first place? Before we had all of this meme coin trading, most attention was in decentralized finance. But then many people got burned with decentralized finance tokens because of the tokenomics, as in more and more tokens tended to get issued over time, the supply increased, and the demand didn't grow as quickly as the supply. Thus, many DeFi tokens, including Arbitrum, tended to underperform Bitcoin and Ethereum. Have a look at this here. This is ARB relative to ETH. And while initially the prices went in sync, there was a peak in January of 2024. And from that peak to today, Arbitrum underperformed Ethereum by 78%. And the reason, again, for that underperformance is an increase in supply. The investors and the team got their tokens unlocked and they are selling over time. This vertical line here shows that unlock. So some people sold already in anticipation of the unlock, and then came the actual selling pressure by all of those insiders. Now, a token unlock wouldn't really be a problem if the project grows quickly enough, right? If there's more and more demand for the token. Let's have a look at those usage statistics. What we've got over here is the number of active addresses over time, starting on February 10th. So this is now the last few months. And we don't really see that much growth, right? So this is 200K per day roughly. What we've got over here is the weekly decentralized exchange trading volume on Arbitrum. And again, yes, there was some growth in the first years, but now we simply just come in cycles. Sometimes we are high, sometimes we are low. Over the cycles, we don't necessarily see that much more growth over the last 2 years maybe. And so this then also becomes apparent in charts like this. The number of new addresses versus returning addresses over time on Arbitrum. Most of the time we have more returning addresses than new addresses that interact with the blockchain. Now, Arbitrum is a layer 2 blockchain. So it's a scaling solution on top of Ethereum. It can transact faster and cheaper than Ethereum itself. And during the time when Arbitrum got launched, we had a direct competitor, namely Optimism. Now, how did Arbitrum perform relative to Optimism since launch? First, let's start with price development. And interestingly enough, since launch to today, Arbitrum and Optimism performed very similarly. First, ARB outperformed, then Optimism outperformed. Now ARB outperformed again. And we are pretty much in the middle of that trading range. Now the usage is not that balanced. What we've got over here is the roll-up profits. And that's a measure of the usage on chain. Arbitrum has roughly 4 to 5 times the market share of Optimism. Arbitrum is way larger. Yet the price development doesn't really reflect that. And Optimism's tokenomics aren't that great either, right? So this is the circulating supply over time for Optimism. And here again is the circulating supply over time for Arbitrum. There is a potential Damocles sword for Arbitrum coming up in a month, in June of this year. Now that's a lot of new tokens hitting the treasury. If those treasury tokens will get sold off directly, nobody of course knows, but there will be some people that short the token. So at that point, right, in 2 or 3 weeks, I will have a look at the short interest. If it's very expensive to short the token at the time, there's a lot of people on the perpetual futures market that bet on falling prices of ARB. we might see a short squeeze. We might see short-term manipulation of the price. If the price shoots up because so many people bet on falling prices because of that unlock, it might make sense to then short Arbitrum. So I'm always looking for price manipulation, right? If we do see that the manipulators push up the price because it's very profitable, because enough people bet on falling prices, then I want to bet against that. Of course, once a short squeeze starts to deflate, we don't want to be caught up within the short squeeze when the price still goes up. But yeah, it's a head-to-head of Arbitrum relative to Optimism. Both of them don't have necessarily great tokenomics. Both of them are likely going to underperform Bitcoin and Ethereum over the long term. But again, in the next month, we might see a surprise rally in Arbitrum if enough people bet on this unlock, right? If enough people get bearish about this. Now, in October of 2023, the market flipped. The market turned from bear to bull. The market saw inflows from traditional finance. And we can see this in this chart. This is the stablecoin market cap. So it shows how many dollars in the fiat system are deposited somewhere with a custodian, say with Tether or with Circle, and what equivalent has been minted as stablecoins on chain. And from May of 2022 to October of 2023, we actually saw a contraction of the market. So money was flowing out of crypto. People were turning back to TradFi. People were withdrawing their money. But that then changed in October of 2023. Since then, we see more people depositing than withdrawing from the crypto ecosystem. And surprise, surprise, this is of course also an impact on crypto prices. When money is flowing in, crypto prices tend to go up. And that is what we see with this chart at the bottom. This is the Bitcoin price. So when money comes into the market, Bitcoin goes up, and that is with a leverage effect. So Bitcoin appreciated by 260% since the beginning of October, while the stablecoin market cap went up by only 85%. Now still, there is a lot of volatility. What causes a price drop like this of 26% while there's actually money flowing into the system? The answer is swapping activity. So it's not just people depositing their money into the system and then wait and invest for the long term. Most people in crypto trade actively. And whenever people move from stablecoins to risk-on assets like Bitcoin or altcoins, the prices go up and vice versa. So there's money flowing in and out, and there is swapping activity, people getting risk-on and risk-off. Now we can use that data because we can have a look at how much of the entire cryptocurrency market cap is currently in stablecoins. When most people have swapped into stablecoins, the stablecoin dominance, so the percent of all of crypto that's in stablecoins, that's pretty high. When a lot of people have deployed their stablecoins, then the stablecoin dominance is low and the crypto prices are high. So check this out. This is the stablecoin dominance, and this is much more volatile than the stablecoin market cap. And at the peak, 19% of all of cryptocurrency's market cap was just stablecoins. So that's when people are very much risk off. And that's then also when the Bitcoin price tends to be low. As stablecoins get deployed into risk-on assets again, the Bitcoin price tends to go up. Now, in the last 1.5 years, we tended to trade in a range. So that's between 9% stablecoin dominance to 5% stablecoin dominance. And if this is now coming back down again, as we have seen in the last few days, then crypto prices will go up. Let's work with the assumption that we see the exact same development of people deploying their stablecoins again as we saw in November of 2024. So let's overlay this. If we take this time frame and we look at the Bitcoin price development during that time, then we can overlay this to the price today. And we're getting to a potential upside of somewhere between $130,000 to maybe even $150,000 per BTC. And so this is, I think, the most likely scenario. I think most people have this backwards. There are too many comparisons made with traditional finance and the crypto ecosystem, as in when the money supply is going up or when the Federal Reserve is lowering interest rates, that's when money is loose and that's when crypto prices should go up. But I don't think the link is that strong. I think the link is much stronger for how much money is currently on the sidelines already within crypto. We know that the crypto ecosystem as a whole is expanding, right? The stablecoin market cap is going up, and that obviously matters. And at the same time, we also see that that a lot of that stablecoin money is not yet deployed, but is ready to get deployed. And so if we work with that scenario, if we say, okay, a lot of that money might get deployed if times get a bit brighter, should we just go now and buy all kinds of random altcoins? I am not so sure, because here's the counter story to all of this. The Bitcoin dominance continues to go up. So as a fraction of all of crypto, Bitcoin becomes more and more important. Bitcoin tends to outperform most other assets. And we only saw an altcoin rally when Bitcoin dominance was close to 70%. So when only 30% of the cryptocurrency market cap was in the alts, that's when the alts were cheap enough to subsequently make a rally. And we are not yet there. So just building a portfolio of altcoins is probably not going to cut it just yet. Here is what I'm doing instead. I'm looking at what are other influencers and other heavyweights buying. So we track various important wallets and we see, for example, how the Pepecoin team or the Base AI team is accumulating the KEK token. And that's happening at a very small market cap, only 3.2 million. We got notifications for all of those purchases, and though the price just continues rising. We still need an edge in this market. We can't just buy any random altcoin, but the market is expanding. It does make sense to take some risk on bets now. Now, since crypto cannot create money out of thin air, it's still a player versus player game. And so if you follow the insiders, if you follow the people that traded well in the past, we have an edge. For example, over here, we've got 33 wallets that we track by the Crypto Banter group. They've got 1.16 million subscribers on YouTube. Or we are tracking 12 wallets by Alex Becker. He's got 1.6 million subscribers. Or check this out, Brian Young. We have 5 of his wallets and he's got 2 million subscribers. So there are two components to this. First, those influencers tend to get information relatively fast. They tend to beat the market. But secondly, they might also have an impact on the market. So when somebody with 2 million subscribers talks about a small cap cryptocurrency, of course, some of the followers will buy the token, which then pushes up the price. And so with all of those wallets that we are tracking, we get various signals. Who's buying and selling what at what point in time. And while it's nice that the market is expanding, it's still a winner takes most market. So returns are very much concentrated in just a few assets. There are mostly losers in this market and a few winners that take it all. Just have a look at the top 100 cryptocurrencies in the last year, right? There are some tokens that perform phenomenally and a lot of them that are just losing. So just diversifying does make sense. If we just build a portfolio of many different altcoins and we don't trade actively, then we are underperforming Bitcoin because Bitcoin dominance continues to rise. Instead, what we need to do is we need to find ways to buy things such as virtual very early. And this is where we come back to Brian Young. We got a signal of Brian Young buying into the virtual token, and that was at 7 cents. So that was on the 21st of March of last year. Our community got excited and bought in. And of course, the rest is history. Right now we are at $1.75. And so this is my strategy in this market. The market is expanding, people are making profit, but still returns are concentrated in a few winners. And we have to have a way to identify those winners. And we don't have to be the best at this, right? We just need to know who are the best and we have to find their wallets. And of course, this is not public information. And so we have to do on-chain analytics to find the wallets. And so of course there is the influencer trade channel with all of those signals, but there's also a tutorial course on how to find different wallets. So we use related trades, we use official NFT transactions, we try to figure out ways through deposit addresses on centralized exchanges, etc. to get new wallets that we then actively track with this automated bot in the channel. And since the community is learning how to find new wallets, we also have a dedicated wallet research channel. So this is then where our 500 members look for new signs for influencer wallets. And once the moderators have confirmed those wallets, they get added to our tracking. For example, here, right, we've got Crypto Gains that suddenly out of nowhere was talking about the Champ token. And of course, we knew about this because we saw the purchase alerts before in our tracking. And so by tracking the insider wallets, we become insiders as well. Not of course in the legal sense, because all the data on the blockchain is 100% official and transparent, but we do have an edge over other market participants because most people don't go through all of that effort. And so it's not necessarily just about buying one asset and finding the winner and holding it long term like virtual. It's also about shorter term trades. And so the community, of course, shares the winning trades as well over here. Just have a look. If you add some leverage to the game, you can make quite nice gains in a short period of time as well. So feel free to check it out. It's currently $125 per month. If your crypto portfolio is not just $500, but rather 5,000, then it's probably going to worth it for you, especially in this current market. If it's your first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in Premium. Cheers.